Bad debts recovered. Bad debts recovered. Okay, sorry, I've got on my answering paper, I didn't change the name there. Bad debts recovered. Okay, what is bad debts? When the debtor cannot pay you, then we write them off as bad debts. And sometimes, so what is bad debts recovered? Debtors that was previously written off as a bad debt can still pay the amount they owe you. This person is not a debtor in your books anymore and was already removed from the debtors list. Not will be and was already removed from the debtors list. So this debtor is not in your books anymore. So if it was a debtor that we wrote off as irrecoverable, it's this situation. It's this situation. So the debtor basically didn't exist anymore in your books because you show that this was what the debtor owes. You receive that amount that you written off as irrecoverable. So that is the total there. But now they come back later and they bring you money. That debtor is not in your books anymore. So you don't use debtors control. Debtor M. Seleka, whose debt has been written off in the previous month, paid 500 Rand directly into the bank account of the business. That debtor didn't exist. Can you see? We are not going to put anything in the debtors control because M. Seleka was a debtor long ago, but he's not a debtor anymore. So you receive the money. We receive the money, the 500 Rand in the bank. It is CRJ, and you put it in a new account with the name Bad Debts Recovered. That means it is money that you received, and the reason for the money are that it was a debtor long ago. This person is not a debtor anymore, so we've got a new account, Bad Debts Recovered. And this is an income for the business. Can you see the plus there? This is an income for the business because we show it as an expense. There we show the bad debts as an expense. Now the debtor come back after a few days or a few weeks and the debtor brought us money, then we don't show it in the debtors control, but we show it in the bank. And we show it on the credit side of bad debts recovered as an income. This one we take to the profit and loss account. And we've got 500 Rand in the bank. Remember, no debtor. Accounting equation for this. Can you quickly think for yourself for the 500 Rand in the accounting equation? Just think for yourself. There's money in the bank. And there's an income. Incomes make your owner's equity bad debts. Not bad debts, recovered. Bad debts recovered. Correction of errors. Errors made in the books of the business must be corrected by a double entry in the general journal. There they mention the error. Stationery purchase on credit was entered in the CJ of the business, the creditors journal of the business, as packing material. Stationery is an expense. Packing material is an expense for the business. Now they put that 1,600 Rand, if there's a total there. In this total, that 1,600 is included in that total. But we don't buy packing material, we bought stationery. So the only way to correct this is 2019 February 28, take it out there, out of the packing material. On the minus side of the packing material, 1,600 Rand, and on the plus side of the stationery, packing material. Because whatever amount is there, and it included, so that 1,600 is included there, and that's wrong. Because they entered in the journal as packing material, they posted to the debit side of packing material. That was wrong, so we must take it out of the packing material into the stationery. This one is going to close off to profit and loss. If this was our only stationery, then it's 1,600 Rand. This one is going to close off to profit and loss. R1,600 less than the total. Let's quickly look at the owner's equity. Remember, your packing material will become less. So there's a plus 1,600 Rand because the packing material, which is an expense, become less. There's a minus 1,600 Rand because the stationery, which is an expense, become more. So only two expenses that was that we had. The one become less, the packing material. The other one become more, the stationery, because we bought stationery, not packing material. Omissions. Number 9 there, omissions. Information that was left out from the books of the business must be recorded in the general journal. So that means that we bought something or we sent back something, we didn't record it, and now that you call an omission. There's our adjustment. Trading stock bought on credit from C&D Supplies for 2,400 Rand has not been entered in the books. We've got more trading stock. So on the last of the year, February 28, we are going to put the 2,400 there. This is a GJ transaction. This is not a CJ transaction because we bought it on credit, but we don't record it. And on the credit side of the creditor is 2019, February 28, trading stock, GJ, because we are busy putting it in now. Remember, you cannot put it in the CJ because the creditor journal was like closed off long ago or few days ago. And then there you put creditors. Control. This is a normal transaction. It seems like we bought trading stock on credit. We did. But it was just not recorded in the books. And now we can do the correction in the general journal. What's going to happen with your accounting equation in this case? Your trading stock become more. You owe the creditors more. So there's, let me just put it in. There's a plus 2,400 Rand because our trading stock becomes more in the assets. There you are. And there's a plus 2,400 because your creditors control becomes more. There you are. That was an omission, and an omission means that they totally left it out of the books of the business.